There are a few types of investors out there, but when it comes to long term, you generally have growth and dividend investors being the two big groups. Now, of course, we also have value investors, but we won't be getting into that in this video. Rather, I think we should just talk about growth and dividend investors to see which one might be right for you. Welcome back to the channel. I'm Jacob Fisher, and it's Minute Monday, which means we need to answer the question, which type of investing is better, dividend or growth investing, and kind of compare the two in just a few short minutes. I'm not an investment professional, so this video is for entertainment purposes only. And with that said, let's change up the background before we tap that like button. That's kind of nice, a little blank slate, but I think we need to, I don't think I can wear a black shirt on a black background. So let's just, that's a bit better. Now let's tap that like button and get into it. We're going to be going over three things in this video. Number one would be the potential growth of the two portfolios. Number two is the taxes you would expect to pay on each portfolio. And then lastly, number three, which one is better? Let's first start off with the growth of two portfolios and get into what I put in each portfolio to backtest this. The portfolios we'll be looking at is SPHD versus QQQ as the first portfolio. And then the next one would be Amazon versus O, the O'Reilly Income company, the one that offers monthly dividends. That's portfolio number two. SPHD offers a 3.71% dividend compared to QQQ with a 0.56 dividend. Amazon doesn't even offer a dividend at all, and O offers a 4.35% dividend. I'm sure you noticed by now that most of the growth stocks, and the growth stock that I chose is in fact a tech company, which is kind of the case because tech has been growing the fastest and generally does grow the fastest. This will be a 20-year back test if the stocks have been around for 20 years with $1,000 starting out in the position and then $1,000 invested monthly for 20 years or however long it goes on for, and then dividends reinvested as well. The first portfolio, QQQ versus SPHD, had to start in 2012 because SPHD hasn't been around, well, first started in 2012, and that's kind of a good thing because it's after the recession, so we don't have to deal with like that kind of drop that happened. In the last 8 years, SPHD reached a balance of $113,000 and QQQ had a balance of $250,000, nearly doubling the value of SPHD. And it wasn't really until 2018 that QQQ finally started to break away from SPHD, with tech just becoming a big name in the sector. That being said, SPHD returns dividends of $4,000 a year compared to QQQ, which only would return $1,400, and that's in the final year of both of them with the max value of the portfolio. Moving on to the next portfolio, Amazon versus O. Now this one, we can use the full 20-year backtest because they've been around for that long, but there is an intense divide between the two that I fully did not expect when I started this test. Starting with $1,000 and investing $1,000 each month, O would leave you with $1.3 million at the end of that 20 years. Wow. But Amazon, you would have $16 million to your name after 20 years had you invested $1,000 a month in Amazon. Again, that really started after 2008, after the recession and everything, where Amazon just leaped over O and just kind of, it took off because Amazon also became pretty big around then. In the final year, O would give you $56,000 a year, while Amazon will give you nothing. Amazon has no dividends, so you get nothing other than your portfolio value. Now in the chart you're seeing, I'm using a logarithmic scale so you can see the performance better. Now this is what it actually looks like with a normal chart, even more intense. Let's get into the taxes you'd expect to pay with these portfolios at the end of the year or end of the 20 years that you held them. Long-term taxes are taxed a little bit differently than dividend income. There's set rates for long-term taxes that are on the screen now, but dividend income is taxed at your normal tax rate each year. In this example, you would have contributed about $240,000 worth of Amazon because, 20 years, $1,000 a month towards Amazon. So your gain would be about 16 million, of course, like 15.8, 15.6, whatever that number is. Anyway, your taxes on that, for the first $53,000 in gain, you pay 0% on taxes, then 15% on 53,000 to 469, and then 20% on the rest. Probably would need to pay about $3 million in taxes on Amazon if you sold everything right after the 20 years. O, on the other hand, the dividends would be taxed at your normal tax rate, and your capital gain tax, if you sold everything that is, you'd only need to pay on the $1 million gain, which, I mean, it's about $150,000, $200,000 in tax you'd probably end up paying. So overall, you pay significantly less taxes on O, but of course you have significantly more money with Amazon. Right, so which one is better, the dividend or the growth portfolio? This one can actually be answered a bit quicker than the other two and listing out facts. Firstly, you need to decide if you want to live off your dividends or have them paying for things like rent right now. Because if you don't need that, then generally you don't need a dividend portfolio, or at least a very high dividend portfolio right now, because you can focus on growth. If you have another source of income that you'd rather use to pay your daily expenses or monthly expenses and don't need that dividend income, then lean towards growth. But if you are looking for your dividends to pay for things, then check out dividend investing. If you focus on a growth portfolio, even just investing in QQQ, that ETF, which has been around for 20 years, you'd be left with about $1.8 million at the end. That's higher than the O at 1.3. Even if you had invested in QQQ, got that 1.8, you could then move your money into SPHD to maybe gain some more in dividends. I know personally I don't need that money right now, and my dividends all get reinvested back into the company, so I'm not looking for a dividend income to supply my normal income. Sure, it would be cool getting $100 a month right now, but why settle for $100 when potentially in 5 years you could be getting $1,000 a month from dividends if you grew your portfolio more in those 5 years? I'll probably end up changing my personal portfolio that you can check out on the corner to dividend stocks eventually, but as for right now, I'm gonna try to move everything into mostly growth stocks to keep that growth going over the next few years. Let me know down in the comments what kind of investor you are and maybe the reasons why you are. I upload videos on Monday, Wednesday, and Friday on travel and finance. If that sounds like something interesting to you, make sure you subscribe down below. Thank you so much for watching, and until next time.